All right, good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, March 4th. So far, seasonality kind of coming into play here. We hear a lot of times that that this time of year, end of February, halfway through March, is a difficult time of the year, and that is living up to expectations. That's one of the things that I think you just kind of have to say. It is what it is. This is a rough time of year, and that's coming into play, as well as a multitude of other factors that are just beating up the market in certain areas of the market. And today, if we look at the averages here in the top left of your screen, S&P finished down 1.2%. The Qs finished down 1.6%. The diamonds, which have been holding up a little bit better, down 1.1%. And today was the small caps that really got hit hard today. They were going down with some decent momentum. They finished down 2.7% for the day and sold off 2.3%. The bonds are a big story again today. We'll talk a little bit about that. They finished down, but a little bit off their lows, which I view as a small victory. And the VIX closed at right around 28.57. So heightened there. That's up 7% for the day. We did get to a high of the VIX of 31. I've got the VIX here on the top of my screen, so right around 32. So nice to see this finished off the highs of the day, but really no breakdown, right? So I'm going to go through in this video kind of what I'm looking for. When we have these types of pullbacks, there's basically a little bit of a checklist, right? And some of the checklist is, it's a mental checklist I have in my head. You could write these things down if it helps too, but I walk through in this video what I look for whenever we see some volatility, right? So you hear about this a lot in trading that how do they say it, right? It is that history doesn't repeat, but it certainly rhymes, right? So when we get pullbacks like this, it's the same type of things that we look for every time. It really is. It doesn't. There's sometimes that these pullbacks end up being longer than some other pullbacks, but really they can last for however long they want to last for. But it's the same playbook, right? And I'll walk through that with you. Let me first go over some performance before we do that. So what outperformed again, right? The same things that we've been talking about. And I'm looking for some of these things to kind of turn where we get a little bit more of a bounce in growth names, but we're not getting that, right? Look at the energy names again today. And I laugh because it is kind of silly at this point, I think, right? You look at XOP is up XOP, the equally weighted oil and gas ETF, was up 3.3% for the day, right? And a lot of call buying. I refer to today's call buying, and there was an OPEC meeting today too, but I refer to today's call buying as, oh my God, energy names are going up and I don't have a position in it. We saw marathon calls. We saw, I think, XLE calls go up, Exxon calls today. But you have to ask yourself, is this really good, savvy call buying at this point, considering that the move has been going on in energy now for a good number of weeks, right? So, these names, they can continue to go to trend higher. There's no one, I don't know how long a trend lasts. If you look at oil, right? So we'll start with the best performers of the day. And, you look at what's going on here, and a lot of people are underweight right now, right? They've been so conditioned to, basically not have any exposure in energy, and this has now been trending for a good number of months. So it's tough to see all this call buying today, and to say, okay, I'm gonna go into energy, but. If you look at where oil is going to go, and we go over this in the TTG pre-market session every day, we go over a macro review, commodities, international currencies, and then of course we go over the indices and we go over what names we're watching for the day. Which, by the way, this morning I was like, I think we just kind of have to watch and see. Like, I didn't really have any major setups that I was, super bullish on this morning. But one of the things I've been saying is if crude gets back out of value, 67 is where I think it could get to, right? That's a virgin point of control, and I think that's where we're going to. So you have to ask yourself, do you want to have some exposure to energy at this point? And I think XLE could get up to about 54, which is another $3 higher, right? Which is a decent percentage move, but that's what I see on my charts. So OIH has been another big one, right? 223 is possibly where OIH could get to. And again, it's kind of like a little bit of a pain trade because I know just a lot of traders don't have a ton of energy on. So right now, this is what's happening, right? People, are going back into some of these areas, and it's a small weight in the overall S&P. So it's not, these names going up are not going to move, the index, right? I think energy is like, without bringing what I bring up all the time, which is the components of the S&P. But I think it's less than 5% of the S&P, all energy names. So it's a really thin slice of and they could go up 10%. They're not going to move the S&P. They're just not big enough weights right now. So let's go back to, so again, the other performers. So that was the shining star, and then a little bit of gold miners. Utilities for a while were strong, but they gave back gains. Consumer staples and financials. So, and financials still fell today, 1.1%. So they were selling off kind of early. Like I dumped out of my XLF calls this morning because I honestly I just I am a little bit wary of names. This acted very well yesterday, but while it was up a little bit this morning, I just figured, get rid of them. And, I've been trying to really get rid of short-term option exposure. And I was in April calls, but I don't know, maybe I go back into them. We'll see. All right, so we talked about the good, right? And again, these are small areas of the market, except for the financials, right? Financials are a bigger weight, right? Let's, instead of me ballparking this, I'll bring this up again so that you can see. All right, I do have a Bloomberg terminal, so happy to share that for the time being. But yeah, look at energy. It's 3% of the S&P. So yeah, it could go up 20%. It's not going to move the S&P that much. Financials a little bit more. They're about 12%. Right? Utilities are only 2.5% of the S&P. Okay. So yeah, if you look at some of the things that are continue to get beaten up here, the semiconductors, right, which is some of these other areas are definitely notable, and the spread at this point between what I refer to as dirty energy and clean energy, right? You could see this is crazy, right? At this point, the spread between the two, and I've been talking about value versus growth and things like that, but this is another area where, what's referred to as dirty energy really got, again, nobody's referring to dirty energy except for me, but when PBW is the clean energy ETF, so I've called XLE dirty energy, but it's really, that's harsh to say. It's just something catchy to say, but yeah, you could see, how long clean energy has outperformed. So you got a retracement going on right now. Right, and names like Blink, which we know doesn't make any money. Right, there was an article a few months ago about this. Right, these things are going to really get. I mean, look at this: $55 to $30. Plug Energy. Just getting taken to the. Let's say taken to the woodshed, but I don't have to be dramatic here. You could see the price for yourself. $70, $75 down to 40. Whew. Nasty stuff. Okay, so we know those areas are going down very fast, right? What I'm also watching is some of this stuff, right? So for example, the semiconductors, right? I want to see the semiconductors start to bottom, right? We're not there yet. So really, as I go through some of these charts, I would say like just kind of beating to the punch a little bit, right? Everybody wants to buy the dip. We've been so conditioned to buy the dip. And I went over this in yesterday's video. I'm like, be very careful out there. I spent a lot of time explaining what my view was on some of these things. And, you have to respect price action. And I want to walk through a couple sectors that I'm watching, and then we'll get to that checklist that I mentioned about what I'm watching for. But you look at this at the end of the day, right? So just looking at the 5-minute bar, right? So a little bit of a bounce from the lows, which is fine. But notice again, what do you see here on your charts, right? Left to right, right? To me, what I see is a downtrend. Right. I also see that every time this bounces, it's a weak bounce. Right. So this is a semiconductors ETF, by the way. Right. And kind of a good proxy for like, where I think a turn is going to come. Right. In terms of more risk on areas. But, every time this thing the last couple of days has gotten to like this, say, 20 period moving average, price stalls. Right. So stalls here, here. Here we haven't, even at the end of the day, a little bit of a bounce, but we're not taking back anything that you can really get your arms around and fall in love with. So that's the semiconductors. I've talked about biotech too, as one of the first things that started to go down. Right, this was on 2.9, and if you look at the overall S&P, where was 2.9 on here? Right, 2.9 was all the way back here. Right, and the biotech started to break down, right around this area, right. So that's why I kind of always in these scenarios, right, when the market is breaking down like this, I want to see the biotechs come back, right. It's a nice risk on proxy, right. So this group is down another 3.2%, and if you look at this, it's kind of the same thing as the SMH, right. You try to rally. Right. Here was a little bit of now there's some false moves in here. I'll talk about those false moves in a second too. But you could see that it's just not able to really turn the corner and show anything that you can hang your hat on either. Right. That's another one of my. Is that a metaphor, I guess? Hang your hat on? I don't know. Clearly, that's not my area of expertise. But what I'm saying is we're just not getting any confirmation that this is. This is done. Now we could see that. We could see that tomorrow. We could see it on Monday. We could see it on Tuesday. We could see it on Wednesday. I don't know, right? And I think that what I'm noticing from a lot of people is everybody's looking for, hey, well, what? Maybe it's the jobs number tomorrow. What if it's a bad report? What if it's a good report? I think number one, and again, I'm going to go through my checklist, but price above everything else. You just have to let this play out, right? Because I tell you again. Nobody knows. It's not somebody who's anticipating a strong jobs report or a weak jobs report number. You got to let the price action play out. It's what institutions are doing right now, right? They're either unwinding risk, shifting it, doing all kinds of things. There's all kinds of models too. I mentioned I would talk about bonds. Look at where bonds finished for the day. I thought they did finish off the lows, but look at the bond futures. Right? The further that bonds go down and interest rates go up, the more severe that this is going to, and you saw it today, right? Powell started speaking today, and, here was the thing that was confusing for today, right? I tweeted this out earlier, and I said, I'm not expecting anything from Powell, right? And I don't think that anybody should. Because there's a Fed meeting in a couple weeks, but he's basically has said the same thing over and over. The interviewer today at Wall Street Journal asked some really good questions, but they're not looking to taper yet, and they're trying to be as clear as possible for when it could happen, but it's going to be a while. Now, for whatever reason, people got in their minds that he was going to do some type of Operation Twist or something in a Wall Street Journal interview, and I'm like, really? You're out of your mind if you think he's gonna come on and announce some big program today in a Wall Street Journal interview. So the market didn't like that. The market didn't like that he didn't say anything. He hasn't said anything different than what he's been saying, as far as I could tell. I listened to the interview, So as soon as that transpired, I guess the market had some built-in expectations that that was going to take place. And look at what happened, right? As soon as he started speaking at 12 o'clock, right, bonds started to go down, yields started to go up, right? And that is causing just the market to freak out all over the place, right? And the faster that this happens, like this, the markets are just it's a major snafu right now for the markets to see bonds move fast, right? It's happened. This type of thing has happened before. There doesn't have to always be like a strong relationship with bonds and with equities, or years ago it was with oil and equities, but the equities will stay fixated on something when there's some kind of cause for alarm. And that cause for alarm is when something like interest rates are moving up fast, right? Equities freak out when that happens. The other thing that I wanted to talk a little bit about is the dollar, right? We got a problem if the dollar, look at where the dollar is, right? If this thing closes above 24.68 and we start getting stronger in the dollar and faster, buying the dip should be one of the first, the farthest things from your from your head, because if this dollar starts to move, if it gets stronger faster, it's going to have the same implicate, in my opinion. Now, listen, I don't want to make up, I hate to make predictions, but I would think if this dollar gets stronger faster, it's going to cause more of these. It's going to cause the equity market to freak out again. Right? Again, if it's a slow, gradual move, as I said before, in bonds, it's not that big of a deal, right? A little bit at a time. Like, for example, go back to this long bond future that I'm looking at. Right? This is the 30-year, by the way, this /ZB. Sometimes I think that everybody knows what I'm talking about. But for example, this is the 30-year bond, right? If we are moving like gently, like down 20 basis points today, there's not that much of a freak out. Right? But we're moving, 1%, right? Or if you look at TLT, for example, right? There's another TLT is plus 20 years, right? So they own, look at the moves that are happening, right? This is much faster than normal, right? If you go back and you look back here, it's 25 basis points, there's 30 basis points. Here's a big move. But what we're seeing is just it's moving faster than it normally does. And if you look at the move index, which is published